Hello, everyone. Welcome to the stream. Welcome, members. Just getting set up here. Trying a new mic position up here at my head. Hope it works. Going to just check audio. Welcome to everyone in the public. If you're not a member of the private group, you can listen in. You're quite welcome. I'm just going to cover a few of the private group things very quickly just now. Just give me 1 second. Just checking settings. Seems to be okay. All right, cool. All right, so here we are. I just want to check that this is actually working as well on seems to be. Seems to be. All right, fantastic. All right, well, welcome everyone. Welcome to the stream. Pietro and Manu, nice to see you guys, and everyone else that's here. And let me just show the comments up on the page so you can see the greetings. So Piotr and Manu, very nice to see you. And everyone else, and all the members over at Arcus FX private group. If you'd like to join the private group, it's $97 a month. There are links below this video. If you're not a member, you should be. Of course, I would say that. Let's have a look at the charts. Now, a few things are moving ahead of the market. Natural gas is bouncing around. We'll talk about that shortly. But I want to first of all point out the short-term charts that we really want to focus on in some of these sessions. And that's the day trading system that we've been talking about. And we got triggers to go long on Bitcoin and on gold and on the NASDAQ and on natural gas earlier on in the European session. Those trades have now run their course, so we're waiting for the next trigger. I'm not sure if we'll get another one today during the new US session, but we'll see. Natural gas is on this page as well. You can see it's coming back in a little bit, but the others are holding pretty well. Nice bounces on Bitcoin, oversold RSI on the 5-minute, also on gold and on the NASDAQ. We were long on all of these in any event, but because of the signals that we got on the short-term system, I added some more Bitcoin on the breakup through this level and the retest from the top. Very simple trade, which we pointed out and traded in the private group. And once we got the signal to buy, I wanted to wait for the confirmation by breaking out through the ledge. Basically, essentially, this was a clear out, which Bitcoin does all the time, as you can see. So that's the liquidity grab down below there. And you can see the ledge, it's very, very clear. That was the grab, and we bounced back above the ledge. And then the entry point was the retest of the ledge from the top, which was successful, as you can see, after a bit of jitteriness. So yeah, just an extra long on Bitcoin and a long on natural gas. I see that one is moving down, but that's really based on our swing trading anyway. But it sort of confirmed a very short-term signal, which may actually fail the way it looks at the moment on the 5-minute chart. I don't worry too much about the 5-minute charts at all, in fact. And my shortest term chart when trading, swing trading, is the 4-hour chart. So quite a difference and quite a different view when you look at this. And natural gas is still, faffing around at the bottom of this wedge, as it has been now for a couple of days. We just moved one step down from this level, and we've been talking about quite a lot, 261. There's another one at 271. So we got a 271, a 261, and we dropped down below that ledge to not quite 251, but maybe that's a good sign. We didn't get quite as far on the third little drop. But nevertheless, most of this action taking place here at the bottom of the wedge. And now all these 4-hour candles forming my favorite pattern on natural gas, which I put up on X this morning, one up, one down reversal pattern at the wedge bottom with an oversold RSI for the first time in this entire time that we've been falling down in this wedge, showing how slow the descent has been, never reaching a truly oversold condition, even though we've dropped all the way from, in this wedge, $3.45 down to $2.55, but never oversold, not even on the 4-hour chart. So super interesting. And so finally, we got the RSI below 30, and the market reacted to that with a one up, one down reversal candle, sideways movement, then another little clear out below the recent ledge down to the wedge bottom again, and we bounced out. Still under the 20-period moving average though, and we've been held under the 4-hour 20-period moving average most of the time since, I suppose, the 30th of March. We've poked up through it twice and failed just as quickly. But never, apart from that, have we managed to defeat even the shortest term moving average, the 20 period, even though we have not been oversold until now. So, I think this has got a good chance of holding here. We need some sort of catalyst. Maybe a new weather report comes out. Maybe some traders reposition, as we can see from the COT reports, the recent COT report. We'll study this week's one now, tomorrow. We've seen that there's a what looks like an underswell or a move from, just checking everything's working here. It is beautifully an underswell or a move in commercials and non-commercials and even in the hedge funds towards the long side, but it seems to be a gradual move as we move out of the shoulder season. But there is just an overall underpinning demand for natural gas, I believe. It's a commodity, and we don't just trade the charts and the weather. We trade it as a commodity, which people need more of or less of at certain times, depending on the weather, sure. But overall, in 5 years, do we need more than we needed 5 years ago? Quantity is important, and the overall sort of demand, and then of course supply. How much supply is? We know that supply has been somewhat damaged by attacks not only in the Straits of Hormuz, not the Straits, in the Gulf, in the South Pars gas fields, serious damage there, which might take 5 years to fix. And there's also been some damage over in Russia in some of the areas where both oil and gas are produced. So and natural gas is generally in demand, and the demand for electricity is continues to grow, etc., etc. And maybe move from coal and God forbid diesel that's burned for electricity like we do in this country, diesel. Yeah. That's another whole story, but God forbid that people keep doing that, for example, and coal, and maybe natural gas is something in between if countries can't go green immediately, and so on. So that's energy. Now oil should be keep moving down. We'll come back to these short-term charts in a little bit. There are no signals nigh just yet. If anything, a sell signal, but these are all long in my trading system, except for natural gas, which is actually short. Going back to WTI oil and Brent crude. Let's look at Brent crude. That's not the one that we trade. WTI is, but sometimes I trade Brent crude too, but not at the moment. But look where Brent crude is resting on top of this gap ledge. It's now been filled. It's an important level, not just in the short term, but if we scoot back to the left-hand side, you can see it's a ledge. It's a thing. I've got ants. I've got ants in here all of a sudden. I don't know what the hell's going on. I've never had ants in my office. I don't know. All right. So important level on crude, Brent crude. So, and trying to get through, we failed at the 20 rolling over on top of us. Still got a gap above that, but we failed on the attempt to get back up with that gap over the weekend when the peace treaty wasn't, didn't happen. But since then, the US has done other stuff, which is the oil price seems to like. And you all know what that is, the blockades and so on. So it looks like it's imminent to break down to at least the 50-period moving average down here, which is another, $10 or so, maybe not quite that, $8. And then, so that's not the one we're trading, but it's always interesting to reference between the two contracts if you want to see, just if sometimes there's a level that one's at and the other one's not, and or sometimes they're both at key levels, which is even better, or sometimes one's signaling one thing and the other signaling something else, which might make you hesitate in a trade decision if you were, dead set on something. So WTI has just bounced up today, in fact, underneath of that channel. Look at Brent crude. It bounced up today and has fallen back down, whereas WTI bounced up and has remained a little bit up. I'm not surprised after some of the rhetoric and news that's come out regarding the US being the world's #1 supplier of crude oil and so on. And, come up to our shores, bring your tankers. They literally, Trump said that. He said they're all rolling up with their empty tankers, hundreds of them, and we're going to fill them up with US oil and send them on their way and make a lot of money. So no wonder US oil price has gone up a little bit. Okay, I'm saying that a little bit tongue in cheek. But yeah, so I think anything under the 20-period moving average, which is curling down the green line, and certainly into allowing for still, something could go wrong. I don't think so. I think most of the kerfuffle is over, but if something does go wrong, and it's not to say it could go terribly wrong and that this could go through the roof again, but if something goes mildly wrong or moderately wrong, then I think we could get back up to the top of the gap at around about $100. But I think getting back above 100 is going to be very, very difficult. And notice that we did not hold above $100 on WTI very deliberately. And every time we got up above $100, there was rhetoric or fake tweets or deals that had been struck in some other world that we don't know about. And every time there was a tweet or a Truth Social required, it shoved the oil price back down at $100. So that's an obvious, very difficult psychological level to get through from purely, I think, deliberately by the U.S. administration, and particularly Donald Trump. I think he's got a very particular interest in this himself. So yeah, so we added some more shorts basically on the retrace back up to the underside of this channel, and only a little bit though, and I think 5% actually, and I'm allowing for more moves back up into the 20-period moving average, back up to that next fib, back to that fib again, and that's at about 93.8, and then maybe all the way back up to the bottom of the gap in the channel center, which we never quite got to, and prevented me from selling more when we approached it. I was waiting a little bit too long. Well, $1 or $2 shy of where we wanted to sell more. But anyway, we got it on the breakdown through the channel, a little bit low down. I added a little bit more there, but I will add more if we do get that sort of scenario. So that's all of that. And then stocks are just going gangbusters up, but I'm allowing for a retrace. We've hedged both of our positions, NASDAQ and the S&P, right at the top yesterday, literally at the top, not quite. It went a little higher, retraced a bit, and maybe slightly higher still, but more or less at the top. And locking in about 1,000 points on NASDAQ. I'm not sure how much on the S&P locked in. And if it keeps on moving higher, I'll take profit. It's got to retrace at some point. And if you look at my video from yesterday, you'll see that my contention is that we should come back like we did on the last breadth thrust on the NASDAQ. I'm very, very aware that this is likely or possible to happen. We've had the big thrust up. Then we retraced 50%, almost 61.8, and we could do the same here. We've had the big thrust up, even bigger, within this context, and we need perhaps a 50% retracement, and that would take us back wherever we have to draw the top of this Fibonacci, which we don't know now because this is still moving up ever so much, ever so slightly. But let's say this is the top. We've got to probably come back 50% into this region here, and that could drag Bitcoin down and everything else. However, there's also a chance that we'll just, pause and bounce around above the top of the pink channel, and wherever we top now on this sort of rally, it's got to top. We've had 1, 2, 3, 4, 5, 6, 7, 8. I don't know. I'm going to just say 13, probably 13 days, bullish days in a row. It's not going to keep on going. So it's definitely not going to keep on going. So maybe maybe today is either the top or currently where we are now, just a little star doji, or we're going to go higher, spike up or something, or maybe tomorrow maybe we have a big solid white day today. Market's going to open. It's just about to open, just opened. Maybe we have a solid white day today and, with very small wicks. And then tomorrow we have a reversal day, an outside reversal day, a bearish engulfing type day, either potentially even a dark cloud cover with a higher high and then coming back down more than halfway through. So that sort of thing. But it may actually have to go all the way to the top of the green and the all-time high before that happens. Maybe, we've got to get there first. But let's see how far we've got so far in terms of fibs. Have we got to the 78.6 or beyond that? We need to go from, we need to go from here, that very top. We could go from the other one. And how far have we got? Yeah, we've got way through the 78.6. So there's no Fibonacci's in play here. We've got through them all. So we're either going to stop here at this sort of double top, interim double top, excluding those two spikes, or we're going to have to go up to that spike again and come down. Don't know. It's going to be interesting. Let's see what today brings. Bitcoin doesn't seem to be turning around at the moment, although I see it's just dropped down $100 as we're speaking, but it's seeming to trying to bounce today. So the other alts, and the dollar's staying low, which is good for all of this. And the oil price is coming down. As I'm talking, it's down to $88. And we're moving into some good profit on our shorts here now. I hope it keeps on going down. Target is $68, and there's a little gap down there at $68 where this rally started off. So that's where I'm aiming for, all the way back down there. It's also the top of this sort of breakout channel. So that's definitely the next target for me, although we've got a lot of work to get through, and it's going to take time. So bear with me for 1 second. I'm going to go and let my dog in to the office. Hang on 1 second. Okay, that was weird. I thought I'd heard Bobby moaning. All right, so that's it, folks. I think that's really covered most of the sort of things that we're talking about in general in our swing trading. That's really an update for members in case of the things you were asking. We haven't talked about gold. Bitcoin, yeah. So either this is the top at Bitcoin. It's awfully close to, and we were talking about this crypto in the live chat room earlier. It's awfully close to that red arrow where I've got the top of this bear flag on Bitcoin. Didn't quite get there. And so I'm allowing for a little bit more of a probe up into that. But this blob is going to be absolutely key. And remember, we've got this fractal, which I've copied from that previous move over there. It's identical, and just sort of stuck it on the top here. And this is the sort of thing, however you place this. I mean, we should have gone down by now, but if it's a bit late moving down, something like that. And you can see the target for Bitcoin is all the way down into the 40s, about 48, about 48, 49, 50, something like that. So these are the concerns with Bitcoin, that we're very close to that level. We didn't quite get there. Should we be, hedging the whole lot? We've already hedged half. Should we hedge so we hedged half of our position at the top for that reason, exactly for that reason. Should we hedge the rest, or should we hope for the best? That was a nice rhyme, wasn't it? The thing is, this is what happens to Bitcoin traders and crypto traders in general, is that they do hope for the best and don't recognize tops quick enough. We want to start hedging, like I have done right at the top there. When we start hedging at the highs, and not when it's too late, when it started crashing down and you think, well, we're going to give it through the bottom of this flag before I start hedging. But by then my account might be down by, 39.3%, but it's going to hold, so no worries. That's the kind of thinking that most retail traders will hold on to their trades. We got long over there. We got loads more longs much higher up, but they're all hedged. But this is our most recent attempt at getting long, putting those ones aside. This is the newest one. And we're long from there, 50% hedged at the top. Like I said, and we didn't quite get to the top, but that's why I only hedged 50%. But most retailers will wait for it to come back down, being absolutely assured that this is for some reason, it's clearly looking more and more like a bear flag. But for some reason, they'll convince themselves this is a bullish channel. It's angling up. We're making higher highs, and so we're bullish. There is an argument for that, by the way. We are doing all those things. but within a structure that might be prohibitive for us to move even further up from here. And so I've taken precautions a little early because we didn't even get there, but maybe we won't. And as I said before, the failure to reach the top of a channel, and particularly a bear flag in this event, the failure to get there and then followed by a movement further and further down towards the bottom indicates that the market didn't even have enough strength to get to the top, let alone get through it. Ideally, we're looking for a touch of the top, a reversal, and a break through the bottom. But quite often the market can't even manage that. Can't even with a last gasp. Maybe that was yesterday, the last gasp. Can we reach there? Can we get up to the blob and make James feel a bit more predictively secure in his predictions before reversing? No, we're going to go early. No, we don't have the strength to get up there. And that's what this sort of thing happens when you fail channels. So I'm watching that one super duper carefully, and I'm already half hedged. So I'll hedge the rest in a jiffy, no problems. And then gold and silver. Well, I was going to talk about this. Let's talk about copper to start with. This one's the star of the show, as I thought it would be. And I'm just looking. I hope the microphone. I hope you can hear me. Let's just check on the other. And it's very clear. Thank you. Thank you. I'm thanking myself. So this is the star of the show, copper, which I thought it would be because of simple, supply and demand dynamics, and it has been, and it's moving up beautifully. But we are approaching this red line, and from whence it comes, I know where it comes from. It's just drawn across the neckline of this potential head and shoulderish sort of pattern. It's not even neat, and in fact, I'm going to just get rid of it. So have we broken up yet through that top? No. But have we broken up through this little, it's almost invisible, unless I make it thicker and put some color into it. No, yes, not that color. Something a bit more, oh no, hang on, damn. Anyway, it doesn't matter. Maybe it's this one. Yeah, anyway, it doesn't matter, I can't find it. But there's a channel, right? And we've broken above it. Is that considered a breakout? A potential head and shoulders neckline, which did turn into be a head and shoulders, didn't it? So there's the left-hand shoulder, head, right-hand shoulder, and the completion of it down to the 200-period moving average. That's why we got long there after the completion of that pattern, and the fact that we retraced to the Fibonacci level, 61.8%, and the 200-period moving average, all on the day chart. So a clear entry signal, and it was followed up straight away with a big bullish candle, with not only a big bullish candle, but it's also a piercing pattern candle, having gone lower and finished more than halfway up the previous very bearish shaven bottom candle. So very good on copper. Lots of white candles though, stacking up. So I expect we'll need a pullback at some stage. You don't want more than 5, 7, 9, or 13. Those are the clusters that they occur in. More than that, we've probably got about, 13 on this as well, actually. And then gold and silver, I've got a small long position on gold, and I've got a larger long position on silver, in addition to my long positions on copper, which are both in excellent profit. These ones are both in, well, this one's in some profit. The silver one is the bottom half of a hedge position, so it's not yet in profit, but it will be quite soon if we move a little higher. So, yeah, so that's the way it is. I'm hoping that these will move up. I'm not all that confident and hopeful in the precious metals, because I think that they are in danger of following those two paths that I've got drawn in, and possibly even worse than that. So this is gold. It could come back to the 200-period moving average and retest the trend line, or it could go even deeper. I suspect we might even test 4,000, and at a massive stretch all the way back down to the original breakout triangle. But for now, we're long, and I'm hoping that we don't have to even do the green path. Same on silver, same sort of thing. And I've got another path drawn in on silver, which kind of similar to gold, matching roughly the time period, and also allowing for a bit of a dip down below the breakout level at that triangle. This one's more sensible. And in fact, it's so insipid at the moment, having run out of steam going upwards, that perhaps we have to do that. And I'll have to re-hedge it if that does happen. But there's the 200-day moving average, and there's the original breakout triangle. and the $55 level, which you all remember very well. Do we have to get through 55 and even poke through 50? And that would really put the cat amongst the pigeons, because there's a lot of long hands built up, long, I mean, not just long, but long in duration, long-term hands holding and hoping that $50 is the bottom and will not go back through there again. But, silver's a bit like Bitcoin. It does that sort of thing quite regularly. And Bitcoin, can come back down through its previous lows and some, stop out everyone, and then go gleefully back up again. And as I see, Bitcoin is moving down a fraction as we're speaking. Let's go back to these scalping charts. I think we've finished mostly on metals now, and oil and natural gas, and stocks, as I said, probably got to come back a bit. That's what's worrying me about Bitcoin and holding on to the longs, even though we're hedged a bit and the dollar's coming down. Let's have a look at the short-term charts. So we're still bullish on Bitcoin on all these still bullish on Bitcoin, still bullish on gold, and still bullish on NASDAQ, but bearish on nat gas on the short-term charts. Nothing to do with the swing trading strategies or analysis of the market. This is mindless day trading. What we're looking for is the RSIs to become oversold on Bitcoin, gold, and NASDAQ before we even consider a trade. And you can see the only one that's close is Bitcoin. Both gold and NASDAQ are actually near the tops. They're actually both overbought, whereas Bitcoin is approaching the oversold level. So we'll be looking for an oversold condition in Bitcoin on the 5-minute chart. It doesn't matter which oscillator you use, really. You could use, as I always say, a 1473 stochastic, a MACD, a momentum indicator, whatever. All sorts of. There are millions of them, and new ones crop up all the time, and some of them you've got to pay for, and they're no better than any of the other ones. There are millions of people that try to sell indicators as if they're new, something brand new under the sun has come along that will put you into the right trades at the right time and improve your accuracy. After, these are guys with accounts on TikTok and ClickBank and stuff like that. After millions of hours of work has been done over decades and centuries by mathematicians on the principles which guide markets. Not only that, but not only mathematicians and so on, but also psychologists and analysts of the human crowd behavior, and millions of them in all the disciplines, and yes, some of these are a bit old and stodgy, like a simple moving average, but there's a reason why people still observe them and they still work. That's a very simple example. But there are some pretty sophisticated indicators. Some of the Japanese Ichimoku stuff, pretty sophisticated and interesting, and not only based on something crossing something necessarily. There's a deeper series of thought behind it. So when people try to sell you indicators on TradingView, the latest one for $5.99 a month, or $100, you can get it for the rest of your life. You can keep those, thanks. You can keep them. In fact, I'll give you $100 anyway, just to stop you bothering me with advertising. That would be a good deal for me. Right. So anyway, on these short-term charts, we're looking for these to become oversold. And I promise you, talking about indicators again, in all the years and now 3.3 decades of trading that I've endured and suffered through, I've studied every one of the indicators. And certainly up until about 10 years ago, or 5 years ago, maybe 7, every new indicator that came along. My background's in mathematics. I'm a post-grad in both science and in philosophy, and so I'm interested in maths. I mean, I actually was going to make a career out of it at one point, and so it interests me. And there's nothing that's come along that works as well as some of the old indicators. Honestly, the RSI, the 14 period, without even changing the period or the shape or anything about it, is one of the most reliable. And they're all about the same. And the ones that you have to pay for are probably worse anyway. In fact, guaranteed to be worse. Even if they draw things all over your TradingView charts for you, smiley faces and arrows and little bombs exploding and little skull and crossbones signs. Do not, this is what they try to sell you. They gamify it, and all they've got is really a MACD and a and a 5-period, 13-period EMA crossing running in the background to produce all these little indicators and pictures and junk. And that's my rant for the day. So folks, I thought we would get a trade. In fact, I thought we wouldn't get a trade, as I was saying, and I was going to delay the stream for later. But we may not get a trade. But if there was to be an oversold condition here on, there's nothing going on gold or on NASDAQ, and natural gas, we're in a trade already. But if there was to be a reversal here at this level, right here, and it would then be another sort of little head and shoulders pattern, allow for a bit of bouncing along the bottom here on Bitcoin, and then try to get into a situation where we get an oversold RSI, like we did over here and over here. We got a little bounce there, but we had that fake out, and we got the clear signal down here with not only an oversold RSI, but also an RSI divergence. This RSI, even though oversold, was slightly higher than the previous RSI, therefore in divergence with the price, which was slightly lower than the previous low. So price moving lower, but RSI moving higher, creating RSI divergence whilst the RSI was still oversold, with the reversal candle triggers at the bottom there, driving us back up through the ledge and forming the opportunity for us to get in where we did. We bought on that ledge bounce, having been given the trigger prior. I waited for the retrace to get in, and then we took off. Now, that trade, I've still got open, and you won't see it on these charts, but you'll have to, I don't know if I'll probably just stop it out. But what I'm trying to say to you is, if there was to be a signal right now, it'd be great if we maybe just poke through there a little bit, and we could even get another sweep below that low. Given that Bitcoin is bullish, right? We're not trying to pick a direction. We have the direction, but we're looking for the low now. And we want the oversold RSI, and ideally we would like to sweep one of these two lows prior to this, because we're talking about Bitcoin. Whenever we talk about Bitcoin, I always wait for the sweep like we did there. So because for some reason, Bitcoin's addicted to liquidity grabs left, right, and center. Well, I mean, obviously we know the reasons why, because it's that sort of market. It's the Wild West, right? So grab here and a grab there, here a grab, there a grab, everywhere a grab. So a grab there, and now we probably have to do another grab, and I don't know how far, maybe down below that little one that we just created, or maybe down below that original grab. So watch it. But you can see right now we don't have an oversold RSI. So if we do bounce from here, the original trade stays on. If we don't bounce and we fail, let's wait. Doesn't matter about the line in that case. We're waiting for the RSI to reset, and ideally a clear out through one or both of these two levels. It's not going to happen in the next 5 or 10 minutes, but it might happen in the next hour or 2 or 3, I think. And as you can see, the NASDAQ is moving up, and I like to have all of these on my charts because they're all different. They're not necessarily correlated identically, but sometimes, for example, the NASDAQ might, and it has been for recent days, move faster than Bitcoin when all assets are about to rally. The NASDAQ has been doing really well earlier in the US session, like we are now. Well, relatively early. Well, we're half an hour in. Early in the US session, the NASDAQ has got going. Maybe it's about to do that now. The entry trigger was given a few hours ago, but maybe we'll get a trigger, a signal now. Now, if we look at this in a slightly expanded view, you can see we're actually at a flat top. We talked about flat top breakouts yesterday and how useful they are, and how easily they are traded on, 5 or a 3-minute chart. There's the flat top. Look, we've broken out of it. We collapsed right back down with a fake, creating what looked like a fake break. This is a good signal to buy NASDAQ right now. I can't do it on this. I don't have my account linked to this chart. This is a great, and we've got loads of longs on NASDAQ as it is already, apart from the fact that we're hedged at the top. But so I don't want to disturb that position really. But it looks like we broke out through the top. We did it over there as well. It's good to look at these patterns. Just zoom out a bit and look at where we are. So we broke out, tried to get out, failed, tried again there, didn't break through, failed, tried again, didn't quite even get there, failed. Now we've tried and we closed above the line. Then we got slammed back down again. That was the manipulation, no doubt, or this whole thing. But then we came back again. And if we can close on a 5-minute basis back above this line, right, that will be the first time, apart from that one failed attempt just to the left. If we can close back above this line on the 5-minute chart, and this candle closes in 4 minutes, it'll be a great place to go long on NASDAQ. It's been a long time since I've been a day trader. I'm actually quite enjoying the cut and the thrust of it all of a sudden. That's what I've been doing this week since my channel got hijacked. So we've moved to this channel temporarily. Oh, by the way, it seems like there's very, very good news. And I've been in contact with the actual YouTube people. I think it's, I'm 99.9% sure it's legit. The YouTube support team on X. And they think they might be able to recover my original Arcus FX account. That has almost 14,000 subscribers and millions of hours of viewing and thousands, 2,500 videos. So that might be recovered. So, but I've been doing the day trading on this channel just to support my private group, of course, because they need supporting. But I thought I'd make it go public. I'd do it in public anyway, because if my other channel never comes back home to me, then this might be the new channel, and it's a good way to just tell people that we're busy trading again. That's all. It's a long, convoluted thing. What was I saying that all about? Anyway, the point is, I'm enjoying the day trading now, and here we go. Now, we haven't finished this candle. This candle, if this candle closes above the black line, for me, that's a pretty good trigger to buy. Now, you might have other things if you're day trading, stock names, and if you're a regular stock day trader, indices or stock names, you'll probably be looking at 3-minute charts. You'll be looking at things like VWAP. You'll be looking at short-term moving averages, maybe 5 or 10 short-term moving averages, looking for crossovers, looking for all that sort of thing. The tools, maybe an RSI or a MACD or something like that as well. But the tools that day traders use when trading stocks, which I no longer do. But I'm familiar with all that stuff, but I don't bother with it too much. I don't day trade much. I do a little bit, but not an awful lot, certainly not in public. So here we go. Unfortunately, it's going off without us. We'd have to wait for a tiny little retrace on here, and we've still got a minute to go for this candle. If you're trading this on a 3-minute chart, you might have already got the trigger. And that's why traders often go for 3-minute charts. Let's have a look. Because, so the 3-minute has already closed above there. So if you're on the 3 minutes, you'll have the entry trigger right now. And we actually did even get a little retrace on that 3-minute candle back into that support to get long at 24,875. So, you might be able to get a little bit there. Now, I'm not saying, by the way, this is not trading advice, and these are not entry signals, and I'm not doing any of that sort. If you're watching and you don't know what's going on here, I'm telling you my thoughts. That's all. I'm not telling you you should or shouldn't take any trade of any sort. Nothing of the sort. I'm telling you what I'm thinking about my own trades, and the way I approach day trading is very different to the way everyone else might approach it, or you might approach it. It's pretty naked, not many things on my chart. All right, so that's the NASDAQ trade. I just wanted to show you that. I'm already, got quite big positions on NASDAQ. They're tucked away, profit locked in, 1,000 points, as I was saying earlier. This is our trade, and I don't know what the NASDAQ's going to do next. And, on a swing trading basis, as I said, we talked about this earlier in this video today. So if you'd like to know more about the NASDAQ and the S&P in detail, rewind this video to the beginning, because we talked about this for some length, maybe a little bit too long, actually. So wherever this turns around, it could be the top of this green block, or it might be here at the ledge that we're currently at. It's a very clear ledge underneath these two horns, right? There's a ledge there. Did I draw it in last time? I think I had, so there's a ledge there, right, with two horns above it. So, are we going to push through here? I think at some stage we're going to have to come back. And my idea is somewhere into a pretty large and indistinguishable zone for now, but somewhere into a pretty large blob over there would be my ideal. Maybe not that large. That's a bit ridiculous, isn't it? Something like that. I don't know. Something like that. So that's kind of my idea. And where this will turn around in order to perform that, I don't know. And maybe it's not for some time. And maybe, as I said, we just go sideways from here and we don't do anything like a massive pullback. And we go sideways for a few days and allow the charts to set. And that would entail, let's draw another little path here. It's going to probably be the same color, but let's change the color. And that would entail sort of more of this sort of thing, you know, like that, and then a breakout. Let's make that one red or purple, just to show you a different one, a different idea. So rather than coming all the way back there, we could do a pullback in time, a PIT. It's a word I learned when I was doing some contract work for Oliprime TV, pullback in time. Now, of course, we know that idea and the concept, but I've never heard it said like that. It looks like we're entering a pit, boys, someone said, and they meant a pullback in time. All right, so yeah, that could be the case. I don't know. But anyway, we're hedged, locked in the profit right there. We got long at the bottom there at the 200-day moving average, locked in the profit with a hedge. So I've got a long there and a short at the top. Whichever way we go, I'm going to take profit on the opposite side, right? So if we move down, I'll take profit on the shorts and add some longs. If we move up, I'll take profit on the longs or re-hedge the longs or something like that, lock in further profit at the top, and then wait for the move down. Maybe get a short hedge to ride the move back down into the retrace zone, or maybe into that chop zone and the pullback in time that I was telling you about. Folks, that's me done for today. I think I've had enough, and I'm sure you've had enough more than I have. So I'll see you in the next video. That might be tomorrow, probably will be tomorrow. And with a bit of luck, if I can get my channel back, it will not be here. And we may even carry on doing these, just one of these videos every day, the rest of my life, just like this, without all the other stuff, without any fluff and nonsense. So that's it. I know there've been a lot of questions here and a lot of not many questions, just a few. But hello to everyone. Nice to see all of you. Yeah, we did talk about metals. Thanks, mate. John, sorry, mate. I think we did cover metals quite nicely, I think. And yeah, pretty good news. But don't count your chickens. Do not believe a word they say until, as the FBI and CIA say, trust but verify, or something like that. All right, folks, have a good one. See you in the next video. Take care. Hi there, I'm James. I'm the founder of Arcus FX. I'd like to personally invite you to join our 24/7 trading group. This is built for traders who want an edge. Inside, you'll get access to live calls on Forex, commodities, crypto, energies, and metals, along with exclusive daily analysis designed to unlock your trading potential. And this in both traditional and now in digital markets. I'm talking Bitcoin, crypto, altcoins, and tethered currencies. You'll gain early access to insider news, real-time updates, real-time support, and premium educational content. If you want to sharpen your skills and boost your success rate, then join me and Paul in this community. This is a fast-growing community of traders who are now writing their own success stories. So don't wait. Join up now. Your edge starts right here.